Hello and welcome to the day ahead. It is Monday, November the 28th. I'm Andrew Gagan. Well, global equity markets were mixed on Friday. Volumes were light on Wall Street in a shortened trading session following on from the Thanksgiving Day holiday. Nonetheless, all three indexes ended the week with gains. However, the Nasdaq fell on Friday, dragged lower by Apple on news that it had cut iPhone shipments from a plant in China, with production hit by COVID-related worker unrest. Activision Blizzard dropped on reports that the US Federal Trade Commission is likely to file an antitrust lawsuit to block Microsoft's $69 billion takeover bid for the video game publisher. And retailers were the main focus as the Black Friday sales kicked in on what is traditionally the busiest shopping day of the year, although crowds at stores were thin, with consumers opting to shop online. US shoppers who have been holding out for discounts spent a record $9.12 billion on Black Friday, with online spending up 2.3%. That's according to Adobe Analytics. Retail stocks have suffered over the course of the year as consumers tighten their household budgets, with the S&P 500 retail index down more than 30%. Well, unprecedented protests have grown in China over the country's stringent COVID restrictions. Hundreds of demonstrators and police clashed in Shanghai on Sunday night, and the unrest has spread to several other cities as frustration builds over China's zero COVID policy. In the US, the Fed will need to raise its overnight target rate to a peak of 4.87% by March. That's according to a New York Fed survey of Wall Street's biggest banks. The banks were surveyed just ahead of the last FOMC meeting, when it raised rates by 75 basis points to between 3.75% and 4%. The Fed's next meets in mid-December, with markets betting that it will slow its pace of rate hikes to 50 basis points. In Europe, there are signs that a looming recession in Germany may be shallower than expected. Europe's largest economy grew slightly more in the third quarter than suggested by preliminary figures, expanding 0.4% and by 1.3% on the year as consumer spending held up. US Treasury yields were marginally lower on Friday, the 10-year down to 3.69%, the 2-year at 4.47%, and the US dollar was modestly higher against most major currencies. The Aussie falling from 67.7 cents, but it's back up to 67.5. Well, the local share market is set to open the week lower. ASX futures currently off just over 0.1%. Global oil prices have fallen about 2% as the EU suspended talks over a proposed $65 to $70 price cap on Russian oil exports, with some member countries saying the cap was too accommodative to Russia. Iron ore futures were up close to 1%. Base metal prices mixed on Friday, copper rising slightly after China, the biggest metals consumer, announced measures to support its economy and property sectors. And the spot gold price steady. Gold futures are up around 0.5%. And the crypto market has been relatively stable over the weekend, with Bitcoin continuing to trade at around $16,500 US. Looking at the week ahead locally, today Reserve Bank Governor Philip Lowe will appear before the Senate Economics Legislation Committee. Wednesday, building and construction data and AIG manufacturing index on Thursday, plus private capital expenditure and retail sales on Friday. And overseas, we'll hear from ECB President Christine Lagarde. Wednesday, also from the Governor of the Bank of England, US consumer confidence as well. And we'll also get non-farm payrolls out of the US at the end of the week. And that is your day ahead. We'll see you again tomorrow.